Okay, so today we are going to talk about short sellings. Many of you think that investing is only about buying low and selling high, but there is a way to profit even when the prices are dropping. So we will talk about it. So let's understand that what is short selling. For example, normally we buy first and sell later. Short sellings reverse that order. Imagine you believe that a company stock is overpriced and it will fall. So what you do, you borrow the share from your broker and sell them at that particular day high price and you wait. If the prices drop, you buy the same amount of share back cheap and return them to the lender and you keep the profit. You are selling high first and then you are buying low. So I'll give you an example. For example, let's say that we are trading gold. Okay. And the price of gold is $4,000, and I believe that it's quite high and the fundamental is not in favor of gold, like the Fed is hawkish, so prices is going to fall. So what I'll do, I don't have physical gold, or I don't have the the gold with me. So what I'm doing, like I will short it. For example, I short it at 4010. Okay, so I short it, say for example, 5 quantity. So what I did, I borrowed it from the broker at 4010, and when prices dropped that particular day to 3950, I sold it, okay, and I made a profit of $60 per unit. So this is what the short sell is. Like we first borrow the quantity of that financial instrument or equity from the broker, okay, we sell at high and we buy at cheaper. So this is what short selling is. And we will also understand the mechanism, what is the mechanism of short sales. Okay, so here's a step-by-step mechanism. The step one will be your broker lend you the share, often from their inventory or from other another client holdings. The second step will be you will sell them immediately in the open market, and the cash that you will receive will sit in your account as collateral. Okay. So the third step that we will see, that you will wait for the stock to drop. When the stock prices will drop, then in step 4, you buy the exact same number of shares back at the new low prices. This is called covering your short. Okay. So our next step, which is the fifth step, will be you return the share to the broker, and the sixth step will be like the difference, whichever will be the difference. Like in our case, it was $4010, and like we sold at $4010 and we buy at 3950. So that remaining amount, that $60, uh, will be our profit. We will, of course, there will be some borrowing fees and interest, and so basically we need to consider that. So this is the process of short selling. Okay, I'll give you one more example. Okay, think of it like borrowing a valuable item. You borrowed a phone, for example, $1000, and you borrowed it from one of your friend, and later the prices of that particular phone crash it to $700. So what you did, like you borrowed the phone from your friend, you sold it in the market on the same day for $1000. After a month the prices dropped to $700. So what you did, at the end of the month you buy that phone for $700 and you return it to your friend. Okay, and the remaining $300, because you sold at a higher price and you buy at a cheaper price, so that is your profit. Okay, so this is the core of the short selling. So it's uh, we have to sell at high and we have to buy at low. Okay, but there is a issue, like for example, if you buy a stock, for example, if you buy a stock for say $50, okay, so what is the worst thing that can happen to you? The price of that particular stock can fall to zero. Okay. So the maximum loss that you will have is for the $50. But it is opposite in case of short selling. In short selling, for example, if you sell something for $50, So your maximum profit will be $50, but your loss can be unlimited. For example, if there is any fundamental news, or if there is any event, or like there is short squeeze, so the same equity or the same instrument can skyrocket, and there is no limit about how much loss you are going to have. So this is the reason that you need to be very careful with the short selling. We will also understand that why people do the short selling. So there are uh, different motivation, like some people have very aggressive approach in terms of trading or investing. Some people are quite defensive, so it depend on their risk appetite. So generally people short it for two reasons. The first one is about the speculation. You have done research and you believe that the company is a fraud or it's overhyped, and if you're right, the payoff can be huge. The second one is like hedging, like buying an insurance. If you have a large stock portfolio, but you have a fear that in short term the prices may dip, you might short index future or sector ETF. If the market fall, your short profit help the cushion the below. It's the defensive move. Okay, so the aggressive is speculation, and the defensive is hedging. And like I already mentioned you, what is the drawback of short selling? So it's high risk. When you are buying something, then it doesn't have that much risk, but if you are short selling, then it's very high risk due to unlimited loss potential. Like I told you, that there is no limit of how much can the price of any financial instrument or equity will go. Okay, but in terms of declining, for example, if the price of a equity is $50 or $100 or maybe say $200, so the maximum loss you can have is the $200. But in terms of short selling, there is no limit. Okay, so like I told you, now the risk, as there are several. When you buy the stock, the worst case is like it can go to zero, you lose 100%. With short selling, a stock can theoretically rise forever. So losses are limited. You can get trapped in short squeeze. If the stocks start climbing, short sellers crumble to buy shares to cover their positions, which adds more buying pressure and send the price to even more higher price. Okay, there is one more thing, like you must think that why regulator allow short selling if it's having the drawback, because there need to be a balance in the market. Okay, means like even this need to have a buyer and the seller. So that's why. So there has been an incident in 2021 with GameStop. I don't know if like some of you already knows, but I want to briefly cover about it, and like I will advise you to go through that, because you really need to have a good understanding about the short selling. Okay, so this is one of the most famous recent example. GameStop was struggling and hedge fund heavily shorted in 2021. Then what happened? Individual investors on Reddit forum started buying shares and call options on a very large scale. The prices exploded as short sellers crumbled to cover. On January 28, 2021, it hit $483, guys. So in January, the price was $20, but in you know January it was I mentioned $20, and just in few days it skyrocketed to $483. Costing some hedge funds billions of dollars. This show how a crowded short can become a trap. It's a perfect example of infinite risk. Okay, so I will advise you to watch about their case study. Also, if you see like gold. Okay, so like this is my add-on example for you guys. So if you remember that in 2025, like gold was only going up and up and up. Okay, since 2022 23, I mean during the Ukraine war and all those US China issues and all, it is only going up. So the short sellers, I mean they were in very much trouble. So that's why you need to familiar with such news, and you have to be quite careful when you are doing the short selling. So just to summarize, so to wrap up, short selling let you profit from a decline. It's an essential tool for price discovery and hedging, but it comes with unlimited risk. A stock can only fall to 100%, but it can rise infinitely. Always use stop loss, guys, if you are doing the short sell, and keep positions size small relative to your portfolio. And I will advise you to keep the short selling as strategic, and not keep selling any blue chip companies and all in the longer term. And this is all about the presentation and a brief understanding of the short selling. And if you have any question, then you can let me know.